Well, hello and welcome to the first trading day of the fourth week of October right here in Lagos, Nigeria. Let's get to the top stories that set to agenda now. For the week, we have some stocks to watch from Afri Invest. You know, they've given some stocks here some ratings, and we have the likes of the banking sector, consumer goods, industrials, oil and gas. And starting with the banking sector there, we're seeing for Access Core, they're given a buy rating there. Upside potential about 30%. That's according to Afri Invest. FBNH, they're saying accumulate right there. Dangote Sugar, they have a hold rating for Dangote Sugar. And for the telecoms, we see MTN Nigeria having a buy rating. Seplat, that's for oil and gas. That's for that's actually a sell rating there. So we see Afri Invest that they accumulate most of these stocks, showing you what should be your radar for the new trading week. And definitely, if you're an investor that likes to hold for long, then you'll be looking at stocks that have good prices right now. You don't want to buy high and sell low. You want to buy low and sell high. So those are the stocks there. Those are the ratings from Afri Invest. Let's get a check on the oil market. Oil prices edged up in early Asian trade today, following a more than 7% drop last week on worries about demand in China, the world's top oil importer, and an easing of concerns about potential supply disruptions in the Middle East. Now we see 0.37%. That's for Brent crude, $73.33 a barrel. WTI, that's a U.S. grade, still below that $70 psychological level, $69.53 a barrel. A bigger move up, 0.45%. The gains represented less than 5% of the dollar value for both contracts that was lost last week. Brent had settled more than 7% lower, while WTI lost a bigger 8%. That marked the contract's biggest weekly declines since September 2nd on slowing economic growth in China and falling risk premiums in the Middle East. So still a lot of volatility in the oil market there. Big moves up or down. Let's get a check on the FX market now. The naira on Friday gained a big 3% last week from 1,660 naira to 1,600 naira. That was a close. And we saw intervention in the market by the Central Bank of Nigeria. They did sell dollars to some of the banks. But for the NAFEX window, it was a dip there of about 59 naira to close, 0.71% down. That's for NAFEX. But big gain there for the NAFEM window. To other stories now, the Nigeria Customs Service said it collected 4.28 trillion naira as revenue between January and September 2024. This amount represents a 33% increase compared to the 3.21 trillion naira the service collected as revenue in the whole of 2023. With the third quarter 2024 performance, the service now has an outstanding of 981 billion naira for the fourth quarter to meet its target of 5.1 trillion naira for the 2024 full year. So we're still seeing big collections there from the Nigerian Customs Service. But on the flip side, manufacturing firms have paid off about 1.62 trillion naira in debts, and that's most of the manufacturing companies in Nigeria. They've reduced their debt burden by 1.62 trillion. That's between February and June 2024. And this is according to data from the Central Bank of Nigeria's statistical bulletin on sectoral distribution of credit by deposit money banks. So this drop represents a 14.85% decline in manufacturing loans, and this coming amidst rising interest rates that have increased borrowing costs across the economy. So definitely we'll see the central bank there trying to tame inflation, raising rates, and the manufacturers there feeling the brunt there for high cost of credit. Well, as Nigeria aims for a $1 trillion economy, stakeholders are calling for technological adoption at Nigeria's borders and financial system. At a workshop organized by the Finance and Business online publishers, participants discuss how technological advancements can transform our financial system and our borders to achieve a $1 trillion economy. Take a listen.
Your medium and your question.
Gathered in this hall are stakeholders in Nigeria's financial ecosystem, regulators and entrepreneurs, and on the front burner of this workshop organized by Finance and Business online publishers is exploring how technological advancements can transform our financial systems and improve overall efficiency. Adoption of technology by regulators in Nigeria has had its challenges, and the Controller General of Customs, Mr. Adewale Adeniyi, represented by the Controller Tinkan Island Command, Deran Nadi, emphasized the importance of technology at the ports.
Resistance to change is one of the challenges that we have. Personnel accustomed to manual processes may resist adopting new technologies, necessitating robust training and change management strategies. One of the key change management strategies that we need is what we are doing here today, and I wish we will have the entire maritime media and all the stakeholders to be part of what you are doing here today. Awareness and clearance of ignorance about opportunities in the industry is what we need. Everybody likes his comfort zone. So whenever you introduce a new innovation in the system, the initial thing for people to do is to resist it.
Also highlighted is the importance of integrating digital solutions into financial infrastructure.
Financial infrastructure to enable inclusion is very key to the economic development of this country. The current president of Nigeria, President Tinubu, is someone that believes so much in the informal sector. And financial technology and infrastructure that can facilitate the inclusion of the informal sector will jumpstart this economy.
It is hoped that with adoption of relevant technologies in Nigeria's ports and financial system, transactions will become more seamless and borders smart.
Good, sir.
All right, so it's a brand new trading week right here in Nigeria. Let's get a sense of opportunities in Nigeria's capital market and possible hedges at this point against currency devaluation and high inflation. Well, joining us for this conversation, we have Mr. Nnamdi Wizo, CEO, Commercial Partners Trading, joining me via Zoom. Great to have you on the show. Hello, Nnamdi. All right, Nnamdi, maybe you might have to unmute. All right, let's try this again. Great to have you, Nnamdi. So definitely it's a brand new trading week right here in Nigeria, but a lot of issues to unpack right there in the capital market. We've seen FBN Holdings, they have a proposal for their rights issue. They also have a new group managing director and a planned name change. How are you seeing all that's playing out with this company? Hello, Nnamdi. I can't seem to hear you. I see your mouth is moving, but I can't hear you. We'll try it again. Maybe you might have to unmute again. But yeah, as I said before, so much playing out in our markets. And from last week's performance and the equities market, we did see a positive gain regardless of the losses, about 3 trading sessions of losses. But we're seeing the market did bounce back with the last 2 trading sessions, and we got a positive close. So a lot to look out for this trading week. Not a lot of economic data to look out for, but definitely it's all about what's going to happen next at the next MPC meeting. It's still about fighting inflation. What's the MPC going to do next? We'll definitely find out about all of that. But let's try and get Nnamdi on again. Okay, we'll try and get Nnamdi back on. Definitely. So much playing out for this week. If you're looking at opportunities in most of these markets, everyone's trying to find out with what we're seeing with geopolitics in the Middle East and with rising cost of living right here in Nigeria. We're trying to find out what's the best investment hedge. We're going to be talking a lot about that. But last week, I was in Nairobi, Kenya for the Accelerated Partnership for Renewables in Africa Forum. That's APRA. The government of Kenya and Irina did co-host the first forum as well, October 14 to 16, 2024 in Nairobi, Kenya. Here's a summary of what played out.
Advocating for a faster shift to renewable energy. During a three-day investment forum in Nairobi, Kenya, these leaders highlighted the numerous advantages of moving towards renewables.
Together, we can innovate on how to overcome barriers and show that we can be faster and more impactful when working together toward the same objective. I'm confident that this forum will result in concrete outcomes.
The forum, hosted by countries involved in the Accelerated Partnership for Renewables in Africa, APRA, brought together ministers, investors, developers, and financial institutions.
Accelerating the deployment of clean energy solutions is not only essential for tackling the climate crisis, but also for promoting inclusive economic growth and improving livelihoods across the continent. The success of these efforts, however, depends on sustained public and private investment in clean energy development.
Stakeholders highlighted Africa's slow investment in renewable energy investment. In the various panel sessions held, the consensus was Africa needs access to affordable financing.
When it comes to hydropower, and we've been looking into this issue for a few years now, about half of Africa's hydropower fleet is in need of rehabilitation, and the good chunk of it is outright sort of run down and needs sort of serious sort of rehabilitation. So we're looking to support also modernization of existing legacy hydropower assets.
I think from a mega point of view, where we engage in projects, it's typical, as I mentioned, guarantees or de-risking are not necessarily band-aids.
At the end of the three-day APRA forum, stakeholders went away with two major points. Africa cannot be left behind in this energy transition process, and even though investment in renewable development has increased, investments need to be ramped up to keep global warming below the 2% target. Ladi Williams, reporting for Channels Television News.
Right, and definitely with the grid collapses we've seen so far, it also talks about also putting in some renewable energy sources with the grid mix to actually help with some of these collapses. But a lot to talk about there, and a lot of investments need to go into that. But let's try and bring in Nnamdi Nwizu again now. He's the CEO, Commercial Partners Trading. Hello, Nnamdi. Let's try this again. Can you hear me?
Hi, sorry, I think I had some network issues.
Fantastic. So I can hear you now. So I was talking before about what we're seeing with the FBN Holdings, the rights issue proposal. They also have a new group managing director and a possible name change. How are you seeing all that's playing out with this company?
Well, I mean, so far it seems to be good, seems to be great. In fact, if you look at their results that they released, half year, you've seen the profit grow by about 92%, which means they seem to be getting something right. And we've also seen them try and change the strategy a little bit with the sale of FBN Quest, which is more or less like their merchant banking arm, and trying to focus more on core banking, core commercial banking. And with the appointment of their new GMD, I think it's all part of their strategy to try and refocus. Wale is a fantastic guy. In fact, I was one of my first bosses when I worked in GTB. There's somebody that I know pretty well, and someone I know is extremely capable, and will be able to, lead them in the right direction, or lead them in the direction that they want to go. So I think that was a great decision from them.
Right, and definitely, coming into a brand new trading week, we're seeing last week, even though the naira lost for the week, there was a big gain there for the Friday session. And we did hear the CBN governor, he did say a weak naira is opportunity for exports. But in your view, when are we going to start seeing this, opportunity really play out, for having a weak currency at this point?
Well, I mean, I agree. If you look at countries like China, they tend to try and devalue their currency to make their exports a lot more attractive. The only challenge that you have with Nigeria is the fact that we don't really export a lot. I mean, beyond crude oil, which is priced in USD, already. So, I mean, that doesn't really help us with regards to the value currency. But I think with what has happened, what we need to try as much as possible is to focus more on the fiscal side to try and encourage, manufacturing companies to set up, encourage production, so that Nigeria now starts to export more. That is when the weaker currency, right, the depreciation of the currency can actually help us. So at this point in time, we are still largely an import-dependent economy. So the thesis around, or the analogy around, being able to encourage export, it will not really be felt at this point in time. I mean, yes, we've seen things like customs revenue increase, but the truth about it is it's not increasing because you've had more exports. It's just increasing because you've depreciated the currency. So government is earning more, but not from production, but just from the move in the currency, which really is not a sustainable one. So we need to try and get Nigeria to start producing so that we can start exporting a lot more. By the time you get things like power rights, you get transportation rights, transportation from, for instance, the farms where you have agri products being produced down to the ports where they're going to be exported. By the time, I mean, you see Nigeria has a lot of livestock, cattle, but we have very few ranches set up for this. And these are the kind of places that we need to look at and say, how can we improve, around these areas? There's no reason why we shouldn't be talking about exporting Nigerian beef. When people go to restaurants and they're looking for, say, for instance, you want to buy steak in Nigeria, people focus more on the imported ones versus locally produced steak from Nigeria. Because, I mean, we don't have a proper ranching system that will help us develop the kind of quality of meat that you need, as an example, and that's such a low-hanging fruit.
All right, let's also look at FDI. How does a weaker currency, how does that influence FDI inflows into a country? We did see our FDI did hit a new low from the last result we got.
Well, ideally, it should, because, I mean, for those who are coming to invest in government securities, those who, I mean, when they come, they buy the Nigerian currency. So what they could get with $1 million, say about 7-8 months ago, a year ago, would have been about 700 million naira, right? Now they will get 1.7 billion, as an example. So you would see that doing this, devaluing or depreciating your currency, would more or less make it more attractive for FDIs to come in. If you look at those who are coming to invest in critical infrastructure sectors in the country, and they are looking, how much can my $1 million take me, or where can my 10 million or 100 million take me? They can get a lot more in terms of value from their currency when they convert it to the naira, and be able, to basically come in and buy up Nigerian companies, as an example, and that would help them, or that would make Nigeria look more attractive. The flip side, however, would be that they would also be worried about what happens with the currency in the mid to long term, because if you come in and you're going to be here for 5-10 years, you don't want to come in and then you come in $1 million, your business grows, but you suddenly realize that in 10 years' time, if you decide to sell and get out, your $1 million now ends up being $100,000. So yes, it helps them come in, but they also need a bit of stability so they know that they can plan when they're coming into Nigeria.
All right, so looking at the global space this time, we're seeing weak demand in China. We're also seeing Middle Eastern geopolitics in the Middle East. Looking at all of this, Blair, do you think some kind of bear market might be brewing, in the global space that could impact risk assets, going forward?
Ideally, that shouldn't be the case, because ideally you should. I mean, you have the Fed beginning to cut. The Fed cut 50 basis points. The ECB cut again, just I think the tail end of last week, either Wednesday or Thursday, they did I think it was 25 basis point cut. We expect the Fed to cut rates again when they have their next meeting, which ideally should spur growth, right? Lower cost of funds means that people can borrow to ensure that they invest and help, grow the economy and grow the GDP. However, the worries that people have is the fact that market has been tight for so long with the increases from all across in rates by all the central banks that you're now at the point where people are worried that they might have kept markets tight for too long, and that by the time they start to ease, we might not be able to avoid going into some sort of global recession once again. But also, they need to be careful in terms of the Fed and ECB that they don't cut too aggressively and end up spurring inflation once again. So it's trying to find that fine balance between the need for growth and also trying to ensure that you don't come and encourage or spur inflation once again. So we're not officially in a bear market, but we'll continue to see the Fed or the ECB and other central banks gradually reduce rates, checking the parameters, trying to ensure that they are getting the rate reduction right. Then we should be able to avoid that supposed bear market, because lower rates should be good for equities market, lower rates should be good for the fixed income markets, lower rates should be good for things like utility companies in the US and all across, and also should be good for sub-Saharan African countries or emerging market countries. So I think that if they get the rate cuts right across by most of the central banks, right, globally, then we should be able to avoid that bear market and start to see the economy and GDP growth start once again.
All right. Yeah, thank you so much. Always great to have your perspective. Nnamdi Wizu, CEO, Commercial Partners Trading. Thank you so much for coming on.
Thank you.
All right, so yeah, we're going to be joining a live coverage that's on DSTV. It's the Abwad convocation service, but Business Morning continues on all other platforms. All right, let's take the conversation further now. Investing when in the midst of a cost of living crisis definitely is a very, very tricky one. But let's bring in Mukhtar Mohammed now, as the CEO of Finance with Mukhtar, to tell us how to navigate this. Great to have you on the show. Good morning.
Thank you for having me always, Laddie. My pleasure.
Fantastic. So talk to me, how do capital markets normally react, in the midst of a cost of living crisis? Is it negative, for the capital market?
Laddie, of course, it's negative, especially when the earning ability is low. So if cost of living goes up, first of all, you think of food, you think of housing, you think of clothing, you think of education before you even think of investment, because those are basic necessity. It's only when your basic necessity is met, you begin to think about your desire to make more money, then you begin to think of the capital market. So when cost of living is high, definitely, most investors don't think about investing in the capital market, especially retail investors, which are low-end investors that are trying to build their wealth over a long time. But for high net investors, it could be a better time for them, because that means some of them are making more, seeing assets coming down, and they have the liquidity to come in. But for low-earning investors, retail investors especially, and like what you are seeing in the Nigerian market at the moment, you realize that a lot of retail investors are not even taking opportunity of their right issues. Ordinarily, they should be taking opportunity of the right and the offer issue, but they are not, because, again, they are thinking of meeting up their basic necessity. And some of them even go as far as reducing their holding to meet basic needs. So definitely, when cost of living goes high, the capital market in the short term and sometime in the long term, depending on how long we see this drag, suffer.
Right, and we see, most investors now having to deal with currency devaluation, high inflation, and a cost of living crisis at the same time. What would you say is the best, portfolio mix that can help outperform these three?
Well, the best portfolio mix is to get, you have to be in all space of the Nigeria market, especially the equity market. You want to play the fixed income space if you're looking at short-term returns. You want to play the equity market if you're looking at long-term return. If you're looking at FX devaluation, how it affects your current, how it affects your holding, then you need to play the capital market. So it depends on which side you are. Just like I listened to the last interview I had, if you're foreign investors, it's good time. FX devaluation is helping you have more holding. also make you invest more and at a cheaper rate. If you're in Nigeria, keeping your money, whether in naira and dollar or not, or it not generating a means of income, means that you are suffering from depreciation. And if you really want to beat inflation or hyperinflation, it's the stock market that you need to play, because what happens is that the stock market sometimes actually goes up to meet up with inflation, because most of the companies that are listed, their goods and their services will go high. That means they will be able to bring in more profit. And so then the price of their equity also might go up. So definitely at a time like this is not the time to really just keep your money in a savings account that is not generating anything, or you are holding a dollar account and you begin so excited about the dollar account because every morning you see the exchange rate goes up. The only time it makes sense and makes value is when you change it back to naira. But if you are going to be keeping that dollar because you have to, you need to spend it in the United States or in the United Kingdom, you have to know that inflation in those places is about 4 point something percent. So if your dollar is not generating up to 6 to 7%, then you are losing money. So whichever way you are, you just need to see how your money can generate more income.
All right, so it's a brand new trading week right here. What stocks do you think are under the radar right now, or sectors that you think investors should actually be looking at for this week?
Now, the oil and gas sector is there. Last week we saw it listed. We saw it started at a high. We saw a slowdown. I think investors should watch the space for that stock. I think it might be getting to where a lot of investors will begin to see a long-term value. It's about 500. It's closed at about 600 and something. Investors are still looking at it. I think it's a good investment for the long term. I say for the long term. So that's one space that you have to look at. You also have to look at Transcorp, the whole of Transcorp Holding. What has happened? What has this result meant to them? What will happen to Transcorp Hotel, Transcorp Power, and then Transcorp itself? The results are impressive, but commensurate with some of the price of those stocks, you might see some pullback in that space. You could see negativity trend in there, especially in the Transcorp Hotel result that comes out and earning per share of just 1 naira for a stock that is selling almost at 100 naira. That you mean you are looking at a dividend yield of 1 point something percent, which is very, very poor if you look at what has happened in other sectors of the market. The banking sector, UBA result came in over the week, and we've seen the performance has been good. Well, investors now begin to see value and buy, but we are still waiting for the right issue or the public offer that could also play in this week. FBN Holdings, also like your first guest said, it's one space to watch out. They're changing their names. They are coming for the right issue. Is it right price? Is it the right value? So we'll see how investors react to those numbers. For me, those are the sectors that we really have to watch out for. And you know that UBA has always been the stock that the chairman of the group have always said that we are strategic in terms of making sure that all our shareholders enjoy benefit, the right issue, that make sure that it's going to do 2 right issue after each payment of the dividend. So tomorrow is the day of payment. So we could see those payments come in. We could see the right issue anytime this week. And we could see a lot of activities in the UBA space for me.
All right, so much definitely to unpack there, but thank you so much, Mukhtar Mohammed, CEO, Finance with Mukhtar. It was great having your perspective today. Thank you.
Thank you for having me, Ladi.
All right, so that's how it's looking right here in Lagos, Nigeria. The markets are open, and we'll be giving you a summary of what's playing out. That's for intraday analysis. That's on Business Incorporated at 1 p.m. We'll bring you all of that information, even from the global markets. That's the show today. Thank you so much for watching. I'm Ladi Williams. I hand things back over to the Sunrise Daily team.